people want what they want when they want it. They want it now. We're in the
Yeah.
economy now. And
Right.
a lot of times people want to pay for something over time instead of having the large amount of cash expended up front.
So, Patty, I met a really interesting guy recently, Derek Barclay, who has a pretty cool
Right.
white label program for BNPL and for consumer financing. I thought it was really fascinating, and of course, his partnership with Mark Beauchamp, who just recently passed away, that
Right.
also really piqued my interest. And so, we have him on the podcast today. I think he's got a really fantastic program. I found it all very interesting.
I was very saddened when Mark passed away, but I
Me too.
am very happy to see that one of his proteges is continuing
Yeah.
what he did.
Yeah, good stuff. And then, of course, we get in with Rich Norton and we talk about how
Right.
to sell out in the field. I've really been enjoying these clips that we talk about. So we'll dive into that. And then tell us a little bit about the insiders today, Patty.
Oh, tap to pay. It's really up and coming. I think we all know that. I have some interesting statistics that show just how fast it is catching on.
Yeah, good
And
stuff.
so with that, you have your disclaimer, I believe, James.
Yeah. So Enable and Derek and all them, they're not advertising clients, consulting clients, anything like that. This is just a great interview with a fantastic individual in the industry. So with that being said, let's dive into the interview.
Let's do it.
Hey, everybody. Patty and I are here today with Derek Barclay, CEO at Enable. How you doing today, Derek?
Hey, I'm doing pretty good. Thanks, James.
Awesome. So, we hear this BNPL word all the time, buy now, pay later, and consumer financing and all of that. And I think the ISOs have been largely left out of that. A big part of that is that they like to white label things and all of that. And so today we're going to be talking with Derek about Enable and what they're doing to create this white label financing platform for buy now, pay later, and just kind of the state of that market as well. But before we dive into that, Derek, I would love to hear your story. I know you're good friends with Mark Beauchamp and kind of co-founded this together, I believe. So love to hear your
Oh,
story, how you
okay.
got into
Yeah.
the industry, and maybe tell us a little bit about, kind of Enable and the story there.
Yeah, absolutely. Again, thanks for having me. And Mark, yeah, was my business partner of Enable. So, he's actually somebody very close to me. Was an investor in a company I started called Loan Hero. But backtracking all the way back to 2012, how I first got into this space was I wanted to be a broker for a lender and go refer merchants to this lender and make a residual every time a loan funded. So that was what interested me, very similar to credit
Right.
card processing.
Right.
And the amount of money that you were making per loan was a lot more money. It was actually like 200 basis points rather than like the normal that you'd make in processing, which is lower. And
Right.
so that got my interest. And then I went down the rabbit hole of starting to partner with a bunch of different lenders, because what you learn is that each merchant's different, each lender's different. And now you're starting to play matchmaker with figuring out, okay, what does this merchant need? Right. And oftentimes what we would do is the merchant would be using a prime lender, a big bank, maybe Wells Fargo, Synchrony, GE Capital back in the day, and they would have to figure out what they do with their turndowns, because the big banks don't approve everybody. So
Right.
Right.
what do you do next, right? And so what I did is I went out and partnered with secondary lenders across all these different verticals. Every time I had an opportunity come to me that I couldn't service, I tried to see, hey, is there a lender out there for that merchant? So I got to see all the technology. I got to see the problem firsthand that was actually something I tried to solve with Loan Hero, where in 2016, I started a company, or 2014, excuse me, I started a company called Loan Hero. And Loan Hero was a venture-backed company. We raised about 7 million in equity. We had a $25 million balance sheet where we actually originated our own loans. We scaled that to about 100 million total in originations. And the problem that we were solving was really the problem that I kind of helped create initially, where the merchants would be using their prime lender, and then they would use a second option and a third option and a fourth option. They don't want to lose a sale,
Right.
right? At the end of
Right.
the day, if it's a high ticket, $10,000, $6,000, if you can't get financing, then maybe they're not going to be able to move forward. And so Loan Hero was one application, one platform, multiple lenders, but we were early. Like nowadays, like buy now, pay later is huge. And pay over
Right.
time is very common and merchants are asking about it. But back then we were early.
Right.
But fast forward, just to go a little quicker here, Loan Hero was a multi-lender platform. We got acquired in 2018. Mark was actually an investor. Mark was actually the person who introduced me to this whole ISO world and
Right.
understanding. And what Mark really saw, and he was on the forefront of, is that, hey, selling processing is hard, right? And you got to find unique ways to get your foot in the door. And this is a unique way. It's another way to pay that can get your foot in the door. And so Mark invested in Loan Hero. He was our outside sales partner channel. He helped us work with over 1,000 partners. And then Loan Hero was acquired in 2018 by Lending Point. I then since had been CEO of a company called ClearGauge, which is a PayFac actually.
Okay.
And they sought me out to help build ClearGauge financing because what they wanted to do was bundle processing with financing. They knew financing was a way to
Right.
open the door in the medical space, and
Sure.
then they would create strategies around, hey, if you don't bundle the processing, it's this price, and if you do, it's this other price. And so I helped build the entire ClearGauge financing, and then I spun out of that with my team and created Enable. So
Oh, very cool. Yeah.
Very, very.
So I think maybe I was thinking about this a minute, like to clarify for our audience, they may not fully understand maybe what we're talking about. So to clarify, what we're talking about today is this idea of consumer financing, meaning if I want to go make a purchase and it's a large purchase, this could be, I want to replace the furnace in my home, right? This could be, I need a medical procedure done that's not covered by insurance, right? This could be many, many other things. And so I want to spread that out over time. I don't want to spend $10,000 on a new furnace. I want to pay $1,000 a month for 10 months instead of, 10,000 up front. So then the business that's providing that service, they want to make sure that I'm able to make that purchase because it's a big purchase. So they're going to come to me and say, hey, we have several options. If you want to cut us a check for $10,000 today, that would be great. We'll take that. But if you'd rather look at some financing options, we have those as well. Right. And then I'm going to go through their, platform or whatever to apply for financing for this big purchase. And so that's really what we're talking about today. And that's what Enable provides. And so I thought it would be really helpful, Derek, as we dive into this. Let's zoom out a little bit. Talk to us about the state of the market in buy now, pay later, and just in consumer financing in general. What are the trends that maybe have you excited or interested right now?
yeah, absolutely. I mean, buy now, pay later is exploding. I mean, point of sale finance in general is gaining popularity very, very fast. And when you talk about exploding, like what do I mean, right? In 2021, we did 20, or not we, but consumers spent 20.8 billion, so 20 billion in buy now, pay later. So that's 2021. In 2025, it's 680 billion.
Wow.
Talking about, massive, massive amount of
Yeah.
scale. And what's really interesting is you ask, okay, well, why, right? What's going on here?
Right.
Well, 43, it's actually out of a payments article recently. 43% of consumers, 43, will either delay or not move forward with a large ticket purchase if the merchant does not have a buy now, pay later solution.
Mhm.
So the mandate's here, like the merchant mandate is here, that it's needed.
Right.
Like you can no longer ignore this. It's growing. Consumers are, I mean, the state of the economy too, right? Like people want what they want when they want it. They want it now. We're in the
Yeah.
economy now. And
Right.
a lot of times people want to pay over time. They want to pay for something over time instead of having the large amount of cash expended up front.
Yeah, yeah. And that I think that's really clear. I really love this topic because I've been noticing the very very same trends that you were talking about, Derek. And I'm wondering, what strikes me is that there's not so many, that is not an army of ISOs out there trying to promote these alternative financing options like buy now, pay later. So for those guys out there that aren't doing this, how would you describe it in terms of how it might impact their portfolios long term?
Yeah, no, it's actually very surprising to me because when you really think about what is financing and buy now, pay later, it is another way to pay. That's it.
Mhm.
So what
Right.
what do ISOs help merchants do all day long? Hey, you're helping them accept payments. So if you're helping them accept payments, this is another form of payment. And so you're
Right.
missing out. So right away, you can look at your existing merchant base and your portfolio and identify, okay, do I have a book of business that has maybe home improvement or any kind of consumer goods that have high tickets? I mean, buy now, pay later, the average ticket price is fairly low. You're talking like, $300-400 for buy now, pay later. With financing, you can go all the way up to $100,000 in home improvement and even more in like solar and things like that.
Mhm.
But at the end of the day, really, you're talking about stickiness as well, right? You're talking
Right.
about the more services you can bundle with your merchant, the better. And so I think this is, a way for ISOs to go out and sell something unique and different, sell something that maybe the merchants are not getting calls about every day, something that actually solves, a different problem than the problem you solve with your card products. So I
Right,
think
right.
it's, multi-pronged, and one thing that we didn't talk about before either is embedded finance. I think that when you start to look at ISVs and you start to think about embedded finance and the growth of embedded finance, that's a whole nother, growth of buy now, pay later, and then the growth of embedded finance.
Right.
Talking about, there was a recent report that QED and BCG came out with just here like late June this year. And they're talking about how embedded finance is going to be 320 billion by 2030. So, and with that, over 150 billion is SMB. So you're
Sure.
talking huge opportunity there as well.
Yeah, yeah. I mean, you mentioned some of the things, and so did James, home improvement, medical. But, I would imagine the potential markets are much broader than that. What kind of merchant types or services would you say are a really good fit for these types of programs?
Yeah, absolutely. Elective medical is huge. And when you think
Mhm.
about just elective medical is one word, but when you start to think about, okay, well, what's included there? Well, okay, well, pets, chiropractic, cosmetic, dentistry, dermatology, health systems, hospitals, hearing, labs. Just medical alone is massive.
Right,
Then you have home
right.
improvement. I could do the same thing with home improvement. You have HVAC, roofing, windows, doors, flooring, medical devices, consumer goods, furniture, jewelry, really anything that's over a couple $500 typically is what I say. Any
Uh-huh.
product or service. We do coaching, we do vocational. Um, uh, Auto repair is a very common one, right? Transmission. Invisalign is a company that I've worked with before in the past, right? Like,
Uh-huh.
those are $4,000 to $6,000. Med spas. So really, a pretty wide range of verticals that anything over 500 bucks.
So as we think about this a little bit deeper for the ISO, I want to kind of zero in on that because I think, as you mentioned, this is another form of payment. I love it too, because it's like, I was thinking about it in terms of, Uber Eats and DoorDash, meaning that when you think about, what ISOs have lost because of Uber Eats and DoorDash, right?
Right.
They've lost so much because that is a payment method that's running at their merchant location that they don't get any money on. Right. And what's going to happen is if the ISOs, there's really not much we can do. There are some other options helping people set up their own delivery and all that, but like there's really not much we can do about that. Here, there is an opportunity to work with companies like Enable to go out there and capture this part of the market. But if we don't, our clients are all going to do BNPL, all of them. They're all
Right.
going to offer this. So the only question is who's going to sell it to them? Are we going to sell it or somebody else? So let's talk about the economic model a little bit. Derek, can you explain to our audience who is a little bit more familiar with this idea of these transactions and, interchange plus and dual pricing and all that kind of terminology? What's the economic model look like for this type of a program for an ISO and kind of for these, you got the consumer, the merchant, and a company like Enable? How does it work?
Yeah, yeah, absolutely. So the lender pays a commission for every loan that is funded. And it's upfront. So it's not like as the consumer makes payments over time, you're receiving a piece of the payment over time. It is the total loan amount upfront. You make, let's just say on average, like let's say it's 2%, like 200
Mhm.
basis points, right? It varies based on the lender, based on the vertical, based on the consumer's credit risk. But okay, on average, about 200 basis points. I think right now we're running at about 250. But so
Right.
200 is pretty safe to say. So now you're building a book of business that you have a bunch of merchants that use your platform to facilitate financing, and you're getting, 200 basis points on all that volume that's originated. Now you can also make money by charging for access to the platform. Our platform is built in the way where the ISO is really in control of how they want to bill the merchant. On the back end, we make money on the funded loan volume, and we share that with the ISO. And then if you want, as the ISO, to charge an additional fee, maybe you're adding 100 basis points into the pricing, right? Like you have the back end revenue, but now you have front end revenue as well. I have some partners that add up to 500 basis points into some of these verticals. It's really flexible and given to the ISO for control. So everything's at the merchant level. The lenders are at the merchant level, and we really give them flexibility in how they want to charge, but it's all based on loan volume. And then if they want to do any kind of monthly fees or setup fees, it's all in the platform, and they can do that based on the program usage. So maybe, hey, if you don't fund a loan in a month, it's $100.
Right.
So things like that.
And then help us understand the other side of this. Like, how does this work as far as the merchant and the consumer? I mean, I'm sure it varies a lot, but like, what would be kind of a traditional way that maybe a merchant would set this up in terms of how they would market it, what type of terms they would give the consumer?
Yeah, so like I mentioned before, everything's customized at the merchant level. So,
Right.
merchants will have different lenders that are set up in a waterfall, right? So, but the merchant, it's very simple. The merchant signs up for the different lenders that they want to offer. They then can advertise the financing on their website, like in their brick and mortar location, and the consumer fills out one very simple application. They either click on the banner on their website, or they get sent a link via text or via email, and the consumer goes through one application process, and then they are given the best offer every time. And so the nice thing is that we have prime lenders, subprime lenders, we have 100% approval lenders. So it really, again, is up to the merchant to choose. Like when we help them with that process, we help our ISOs teach their merchants how to enroll in the right programs based on a vertical level.
Interesting. And so the merchant could potentially, though, if they wanted to do like, hey, 0% financing,
Yep.
and then right, and then they would just have to pay that, like that interest, or depending on, I guess, the loan structure, how that would work. Is that accurate?
Yeah, discount fee, a merchant fee, right? Just like you have a credit card processing fee, like the
Right.
Interchange Plus pricing,
Sure.
have a merchant fee that's associated with financing. Now, the merchant fee can be, we have some lenders that have 0% fees, and we have other lenders that have up to 25% fees, but it could be on the subprime or high risk verticals,
Right.
right? It really varies based on, and the important thing is, if you're an ISO and you're out there trying to figure out, okay, well, how do I know who to partner with? And that's what we do. We're the ones that are out there aggregating all the lenders, getting everything into one place. And then at
Right.
a merchant level, everything's customized. So like when you're selling the merchant, it, every home improvement contractor is a little different, honestly, right? And so
Right.
even that, and then working with a contractor is much different than working with a plastic surgeon versus a dentist. And so the nice thing is, with what we're building, it's the same flow every time. The application process is always the same, and on the back end, we just have multiple lenders.
Love it. So let's talk about the white label. That's a really, really important thing to the ISOs. But I
Right.
want to make sure I understand this. So when we say a white label, are we talking about the ISO is white labeling something to the merchant, or the merchant is white labeling something to the consumer, or both? Like, how does the branding work with all of this?
Yeah, so at the core, it's for the ISO to white label as their own brand.
Okay.
So to go out and build what we've built is very complicated. We've built it with the pure intention of going through this channel. That's again why Mark was my business partner, right?
Right.
So when you really lift the hood up, you'll start to see that this is built specifically for the distribution networks that exist within ISOs, right? And so at the core, it is built to be white labeled by the ISOs. We can also do white labels for merchants. So as you're a white labeled ISO partner with us, and you're out there selling, and you get some major distribution deal, you get some network of let's use Invisalign, right? Invisalign wants to have Invisalign financing. That's totally fine. Like we can do a white label for that major merchant within for the ISO. But at the core, ISOs take it, they brand it. Nobody knows it's Enable behind the scenes. And now you can use it to go out and sell your other products, bundle, do the things that we were doing at ClearGauge.
Right.
Right.
Cool. I love it. All right. So I have a couple of things I wanted to talk about real quick. I want to shift gears for a minute and talk about ISV. You touched on this earlier with embedded finance. I think that our audience may not really understand, some people may not understand exactly what you mean by that. So maybe you could talk about a little bit of this opportunity for the ISV and, how they would utilize Enable. And then also just kind of highlighting this opportunity for maybe those agents and ISOs that are like, I'm trying to reach out to ISVs, but it feels like white noise because they've already heard from everybody that wants to do payment monetization. So maybe talk about that a little bit.
Yeah, no, you're dead on. And so one of our big strategies is going after ISVs, because if you put yourself in the shoes of an ISV, what are you going to do if you need to solve embedded finance? If you are a contractor if you're a CRM for contractors and all the consumers' data is in there and you want to offer financing, what do? Do you go out and integrate a prime lender? Okay, now they said no, you got to integrate a second lender and a third lender.
Mhm.
And So ISVs are a perfect fit for our solution because with us, it's one API, we have one sandbox, and you can deploy through at the merchant level. I keep saying that on purpose, by the way. At the merchant level, it's flexible and customized, but it's all through one solution. And so for an ISV, we de-risk the risk of a lender changing their mind. We de-risk maybe a lender was not approving quite as much as they thought they were going to. This stuff happens all the time. Like
Right.
even at ClearGauge, we changed direction on a couple partners, and we no longer wanted to do certain verticals. And all of a sudden, those ISVs were stuck without a program. They integrated, wasted a lot of time and resources, but didn't get. So with us, and we actually have lenders, by the way, coming to us and saying, "Hey,
Mhm.
one lender, can we white label? Can we use your APIs with this ISV? So then we de-risk the ISV is de-risked just in case if we ever don't want to work with this vertical anymore."
Right.
Right. So I think, you really just you put yourself in the shoes of these platforms, and the future is one place to go to
Right.
deploy flexible, dynamic, pay over time financing. And Affirm and Klarna, that's just one lender, right? That's just one option. So what if Affirm says, no, I'm working with some merchants right now where the approval rate's less than 30%.
Hmm.
So, okay, Affirm's at checkout. They said, no, now what? They abandoned?
Right. Right.
Right. So I love that. So talk about that more. How do you stack up against these major competitors, like Affirm and others? What separates you from them?
Yeah, so we have those kind of lending programs in our platform already. So we have buy now, pay later products in the platform. We have prime, near prime, and subprime products in the platform. So really, where they're single threaded and they have, I mean, they do a lot of things well. I'm not going to sit here and say Affirm doesn't do a lot of things well. Their experience is top notch.
Sure.
Klarna, the experience, top notch. The vision of Enable is to be the same top notch, every single simple consumer flow, but on the back end, all these different banks and lenders, community banks, credit unions, lenders that can't access consumers and certainly can't build technology to intersect where these transactions are starting to occur, which
Right.
is fully embedded, right? And so
Right.
I think in the long run, I think a multi-lender solution is where everything's going. I think even seeing like, there's lenders that I know back in the day would never have worked with Loan Hero, and now they're fully gravitating towards these kind of solutions that exist.
Yeah, absolutely.
Yeah. Yeah. This is really exciting. I have to tell you, Derek, I love this topic. So, I'm sure a lot of our listeners are going to want to learn more about this. So, where would you send them if they wanted to, learn more about working with Enable?
Yeah, absolutely. Our website is probably a good place to start. It's enablefinancing.com. So just ENABLE financing.com. And then also my LinkedIn. If you see
Mhm.
this, I know that I see James a lot on my LinkedIn. So if you see this circulating on LinkedIn, reach out. Like I'm
Yeah.
very responsive. Would love to connect. You're going to see a complete not a rebrand, but we're doing a big refresh here coming up into September, and you're going to see a lot more with where we're going. We want to really help ISOs win in this space. And I think
I
it's
yeah,
not just an afterthought, right?
Yeah.
that's really great because I'll be honest, I've used these buy now, pay later things, especially for my pets. When you have a lot of pets, it gets expensive. It really
Absolutely.
does. Uh, and for home improvement type things. And I love it because it allows me to spread it out. And I would love to give that business to, you know, a, an ISO rather than a big lender.
I
So
don't I don't want to get too far ahead of like where we're going, but like this is like the next level of where we're going. We're going to start funding the loans through virtual cards. So I mean,
yeah,
like have the
sure.
network. So now all of a sudden you're going to take volume that you're going to double dip. You'll get
Right.
volume on the card side and you get volume on the financing side. So
Right.
where we're going is very highly aligned to ISO. So if you're going to be, it's a big investment in time, right? It's not like just some
Yeah.
simple little thing. It's like, okay, you got to make the decision that you're going to take this and embrace it. But if you're going to do that, it's good to be with a partner that actually is more than just tech. Like we are
Right.
great, but we're more than just tech.
Yeah.
Right. And you're more than the technology and you understand the ISO market. That's really great.
Great stuff, Derek. It's a real pleasure having you on today. It's been great getting to know you, and I appreciate you taking time to share these insights. I'm sure a lot of people in our audience are already have their mouth watering over those 200 basis points, and they're going to be reaching out to see how they can white label it. So thank you again for your time.
All right. Thanks, James.
We had Vlad jump on the podcast and make an announcement about the professional card.
I love it.
Yeah. And so if you have not gotten yours yet, this is a card specifically designed for payments professionals. And you can get paid residuals faster. You can get financing on hardware that you're buying. So there's a bunch of really cool benefits like that. But all that to say, head over and get that card right now. It's nativia.com/professional. So nativia.com/professional. Head over there and get your payment professional card. Hey, everybody. I'm back here with my good friend, Rich Norton, out in the field today. How you doing today, Rich?
I am doing excellent. I want to thank you for all these videos that we've been doing. It's been great. And I'll tell you what, the calls that are coming in, and it's a story that I hear over and over again. It's like, man, I want to be successful in the business. I want to have great success, but I got to just get some mentorship. I got to get some training. And we're getting calls from all over the country, and I'm handling them. I might have to pass some off to some of our executive team, because I talked to my wife. It's like, yeah, I got 5 new people that I talked to today, and it's exciting to see, especially the hunger of representatives that are saying, man, I know this is a great business. I know I can be successful. I just want to get with the right team. I want to get with the right people. So it's been great. So I've enjoyed doing these videos with you. So thank you for the opportunity.
I get a lot of great feedback as well. I think the agents really enjoy just kind of hearing from somebody out in the field who's selling, that's being successful. So let's talk about that, right? So let's talk about goal setting, because I know for a lot of people, they get into business and there's kind of not like maybe a benchmark for them. And so they say, well, I made 1 sale my first month. Did I do good? Did I do bad? You know, I'm in month 6 and I have $500 in residual. So talk a little bit about when a new representative joins your team, what are the goals and kind of benchmarks that you encourage them to set as they get started?
Absolutely. And one of the first things that we do with all of our representatives coming in, we have an orientation with one of our executive team leaders. And it's a great point that you make. The first thing that we cover to help take the pressure off representatives, because of course, we have a lot of upfront money, which is great for representatives to earn that, while they're building their book of residuals. But I think the key is to set a goal, and you write this down. What is your lifestyle? What do you need to make in a month to cover that lifestyle? That's your first goal. Write it out. And then you have to put together a plan, because a lot of people, like when you think about New Year's resolutions, it's like, oh yeah, this year I'm going to do this. And they're not specific at all. And then a month goes by. It's like, how'd that goal go? Well, wait till next year. It didn't work out. But that's goal number 1. And it's eliminating the pressure. It's like whatever that number may be. And we've seen it might be 3,000, it might be 5,000. We've had representatives where it's like, I got to make 20,000 a month. That's like, all right, we got to get going, man. We got to put a plan together. But it's great, because once you get to that point and then you put that plan together, this is what you're going to need to do. This is how many merchants you're going to need to write per month. Let's put that goal together. And exciting to see that when a representative, whether it's 5,000 a month, they can get to that point. And I'm being realistic and being transparent that if you're average, you can get to that within 5 or 6 months. It might be the first month. It might be 2 months. It might take a year. But let's put together a plan on what it's going to take to do that. I use examples because I have a couple hundred representatives all around the country. And I think about a representative we had in North Carolina. He's doing great. He's already achieved great things in a couple of years. But his first year, he was plugging along, writing about 8 a month. Not a big deal. If you're consistent doing that, you can build an amazing life. First year, he got up to about $12,000 a month. Now he's working on getting close to $20,000 a month after his second year. So that's why it's so important to set a goal, but not only to have a goal, have a mentor, and then put a plan together on what it's going to take to achieve that goal. And all around the country, we have examples, and I tell everybody, I'm transparent. You can talk to any representative on our team, whether they've been here for a month or whether they've been here for 20 plus years.
Right. I love it. So Rich, for those agents who are listening that are like, yeah, I want to set those goals. I want to get the benchmarks, but I'm not really sure for myself, what my plan should be. And they want to maybe reach out to you or your team. Where would you send them to learn more?
Yes, certainly call me. Like I was saying, I'm getting a lot of calls, so I might pass you on to one of our executive team leaders, but eventually I will speak to you. But I like to make that first call just so you know that I'm out here in the field. You see me in my car. Everything that we're teaching is exactly what we do in the field. That's what we're teaching. It's not like back in my day, this is what I did. This is what you need to do. Call me. You can reach me at 904-434-4635. You can email me at payrock, Payroc, Rich Norton at gmail.com. Be happy to talk with you, find out what your goals are, what you want to accomplish. And if it's a good fit, we'll have you join our team.
Love it. Thanks, Rich. As always, it's a pleasure having you on.
So James, tap to pay is going great guns these days. Visa is reporting that 80% of in-person transactions globally, excluding the United States, were done this way during its third quarter, which ended on June 30th.
Wow.
Yeah, that's pretty impressive. In the
That's amazing.
US, it's about 50%.
Yeah, that sounds about right.
Yeah, and in 30 cities, it's better than 60%.
Okay.
Transactions done this way. They say in New York City, sometimes it's, in that 60 to 65%. Because, obviously they're much bigger and a lot more tech savvy.
Yes.
Clearly the pandemic contributed to the trend. I know myself included. I go to a store. If they don't let me tap with my card, I get turned off. It's a pain, and I don't want to even running it down the slider is too much of a pain for me.
I know. Isn't it funny? Isn't it funny? Like the level of like convenience that we've grown accustomed to. I mean, it's like, to me, it's like there's so many little things now that it's, when I think about it, it's kind of ridiculous. Like,
oh yeah,
but it's just the way it is. It's like if I go to a website and I can't pay with Apple Pay, like I'm sorry, I'm gonna go to Amazon. Like I don't really want to type my card number in. Like that takes me like a minute. It's funny. Like
I get impatient in the morning when I'm powering up my computer and the prompt doesn't come up fast enough for me to put my pin in, right?
Right, exactly. And then you think back to like not that long ago, it's like dial-up internet,
right?
So, but
I remember in the 90s when I was writing newsletters, I would have to like do everything onto a disk and then like drive like bat out of hell to get to the FedEx office,
right?
For the very last drop of the day, so that they could get to the production team the next morning, right?
Oh, I remember. It's funny. The first payment processor that I ever sold for 15 years ago, when I started, they sent me a packet of information, like a pitch deck,
right?
And then they also sent me my first 2 prepaid overnight packages so that I could send my first 2 sales in. You know what I mean?
Right.
Through FedEx, so there was no online app. That wasn't a thing, So.
I know. It's really interesting. And, for in the US, it is lagging behind the rest of the globe, but we always do on things like this,
Yeah.
And there's a company called Marqeta that based out of California did a survey that released, when was it? I think in June or July. And they found that just 46% of Americans who participated in the survey had used contactless payments, compared to 80% in the United Kingdom and 69% in Australia.
Okay.
So in the US, 1 out of 2 payments is being tap to pay, though, is no small achievement. And as I said, in New York City, it can go even as high, according to Visa, it can even go as high as 75%. I thought it was 65, but yeah, my notes were a little bit sketchy there. Visa's McInerney, the CEO, said buyers, sellers, they love tapping as a way to pay. And we're going to continue to see that growth accelerate in places like the US. And I think yours and mine, our experience just reinforces that.
Absolutely. Yeah. To me, it's either Apple Pay or tap to pay pretty much all the time. I mean, but you do run into those businesses where it just doesn't work, and it's
in fact,
it's kind of annoying.
And it's chains. I've had chains. I mean,
major
absolutely. Chains that I've gone to, and it's like, what do you mean? I mean, I'm tapping.
Right, right. And they're like, no, that doesn't work.
I'm like, oh, really? You're gonna make me insert my card?
Right. Wow.
Yeah. So anyway, I think
Very
it's going to
interesting.
be. I think we're going to see a lot more activity in our markets on that as well.
For sure. Awesome. Well, thanks as always, Patti. Appreciate the insights.
Sure thing, my friend.